A mutual fund is a company that brings together money from many people and invests it in stocks, bonds or other assets. The combined holdings of the mutual fund are known as its portfolio. Investors buy shares in mutual funds. Each share represents an investor's part ownership in the fund and the income it generates. Now that we know what a mutual fund is, let's see how we can buy and sell mutual funds. Investors buy mutual fund shares from the fund itself or through a broker for the fund, rather than from other investors. The price that investors pay for the mutual fund is the fund's per share net asset value, plus any fees charged at the time of purchase, such as sales loads. Mutual fund shares are redeemable, meaning investors can sell the shares back to the fund at any time. The fund usually must send you the payment within 7 days. Before buying shares in a mutual fund, read the prospectus carefully. The prospectus contains information about the mutual fund's investment objectives, risks, performance, and expenses. Okay, let's talk about types of mutual funds. Mutual funds are divided into several kinds of categories, representing the kinds of securities they have targeted for their portfolios and the type of returns they seek. There is a fund for nearly every type of investor or investment approach. Other common types of mutual funds include money market funds, sector funds, alternative funds, smart beta funds, target date funds, and even funds of funds, or mutual funds that buy shares of other mutual funds. Equity funds. The largest category is that of equity or stock funds. As the name implies, this sort of fund invests principally in stocks. Within this group are various subcategories. Some equity funds are named for the size of the companies they invest in. Small, mid, or large cap. Others are named by their investment approach. Aggressive growth, income-oriented, value, and others. Equity funds are also categorized by whether they invest in domestic, U.S. stocks or foreign equities. There are so many different types of equity funds because there are many different types of equities. Fixed income funds. Another big group is the fixed income category. A fixed income mutual fund focuses on investments that pay a set rate of return, such as government bonds, corporate bonds, or other debt instruments. The idea is that the fund portfolio generates interest income, which it then passes on to the shareholders. Sometimes referred to as bond funds, these funds are often actively managed and seek to buy relatively undervalued bonds in order to sell them at a profit.